get started. Welcome everyone. We may have a few more people joining in progress. I want to welcome you all. My name is Hannah Bowen and I'm with the Intentional Endowments Network. And we are thrilled to have you joining today's webinar. I'm just going to give a very quick overview and then we're going to go right to Tom and Connor to hear from the CDP team about what they're up to and how members of the Intentional Endowments Network can get involved. So if you're not familiar with IEN, very happy to introduce you to our work. We're a peer learning network for higher education and other nonprofit and philanthropic endowments, along with all of the stakeholders who make their work in sustainable investing possible. So consultants and managers and nonprofit partners and other peer networks like ourselves. And we work as a platform for that exchange and for building out the field of sustainable investing, which is more important than ever as we face so many different crises. And you know, a lot of what we're doing is just convening these kinds of events in person or virtually and trying to get ideas out there, trying to make connections, and trying to give you all the tools you need to make change. So I just want to flag one upcoming event series that we're really excited about and that, you know, we've really designed to fit these very strange times that we are in. So recognizing that, you know, we're not able to come together in person, but that we're all trying to do some really hard and important work. We've designed a series of virtual events building on the Intentional Endowments Network's previous climate leadership summits that will take the form of a pursuit this year and follow from February through to December, giving workshops and tools and networking opportunities in a carefully curated program. And we've just launched registration. We're getting our speakers and sessions, hosts, partners, and sponsors all up online in the coming days, and many are already there. So take a look and we'd love to hear how that process and that event series can be of most value to all of you. And I think it's particularly relevant as we turn over to the CDP team to think about, you know, with new tools that you're going to hear about today, with some inspiration around engaging with companies and thinking about what could be possible. We're really excited as a network to give you the support you need to, you know, work with each other and really carry that through. So if you get inspired today, the Climate Action Pursuit and our other programming can help be a support to help you achieve the goals that you'll hear about today. So with that, I'm going to hand it right over to Tom and Connor. We're going to start with their presentation and slides, but feel free to use the chat function to ask any questions as we go along. There's also a Q&A button if you prefer. I'll be monitoring those, and when we get to the end of the initial presentation, we'll start reading those out. If you'd like to ask a question live, just throw that in the chat and we'll be able to call on you as well. And again, we're recording the webinar, so you'll be able to share with colleagues after the fact. And yeah, with that, I will hand it over. Any logistical questions, throw those in the chat as well, and I'll be monitoring those and listening along with all of you. Over to you, Tom.
Great, thank you so much, Hannah, and thank you for sort of hosting us today, where CDP is sort of a proud member of the IEN network. So we're very excited to be able to, you know, reach out to some of the members, either if they're already CDP signatories or some that are considering becoming a signatory. We're very excited just to run through essentially how we operate, what the disclosure process looks like, what kind of data we hold, and how it's useful to endowments or other institutions that act within the capital markets. We'll also take some time out to talk about our shareholder engagement. So one of my colleagues who's based in London, Connor Hartnett, will sort of discuss our engagement models that exist outside of the disclosure process, as well as other opportunities for engagement within the CDP network and beyond. So for anybody that is sort of not familiar with CDP, we're a global environmental impact nonprofit that runs the leading environmental disclosure platform. So we reach out to sort of companies, cities, states, and regions, ask them to respond to questionnaires that allows more information to become known to policymakers, businesses, investors, and purchasers to allow them to manage their climate impact and make better informed decisions. In terms of our network, we work with over 550 global investors that are signatories with CDP. They collectively manage over $100 trillion in assets. We also work with a variety of supply chain members in a slightly different program, which we call the Supply Chain Request Program. But between the investor and supply chain request programs, we, in 2020, had over 10,000 unique responding entities disclose environmental information to CDP, including over 9,500 companies and nearly 1,000 cities, states, and regions. Just to sort of briefly describe our model and how we work, as I mentioned, we work with a variety of investors and companies who request companies as well as cities and regions, as I mentioned, disclose information to us through what we call the investor request, which CDP manages. Over the course of the year, those companies will post their responses and disclose relevant information to CDP, which we then make available to investors, companies, and policymakers. This allows those entities to better measure performance of their stakeholders or invested companies, as well as generally improve performance in their environmental impact. Beyond our Investor Signatory program, we also work with and supply data to many of the major data providers that your members might be aware of, ranging from Bloomberg to FTSE Russell, ISS, organizations like these. We are a core member and foundational member of the ESG data ecosystem. We also work with a variety of not-for-profits and sort of supply and engage in data partnerships with those. And in this way, we're sort of really the foundation of a lot of the advocacy that goes on in the environmental finance space, but also investor support of our mission allows these companies to sort of greater leverage their own goals and data capabilities. We work across three main thematic areas. We have a very narrow focus on climate change, forest, and water. Our climate change questionnaire is our flagship questionnaire and has been distributed to companies for over 20 years and is fully aligned with the recommendations for the Task Force for Climate-Related Financial Disclosures, and which I'll discuss in a minute, but mainly ask companies to disclose their degree of climate risk management, risks and opportunities that they are pursuing or attempting to mitigate, as well as specific GHG emissions levels and targets. Our forest program looks at 4 principal forest risk commodities, ranging from timber, cattle products, palm oil, and soy. But we also ask broader ranging questions around deforestation risks, as well as supply chain engagement. And similarly, our water program looks at water risk assessment, water accounting and governance, and really looks at companies that are targeted in water intensive sectors. And we've had nearly 1,500 companies respond to that particular survey in 2020. So these are our 3 sort of main focus areas. We also do ask sector-specific questions in each of our questionnaires to better allow sort of investors and consumers of our data the sort of most nuanced view of what a company's climate strategy is. Just to sort of briefly pause there, in terms of our sort of partnership with the Intentional Endowments Network, we see a common partner here because of through mission alignment of supporting institutions in mobilizing capital towards a low carbon economy. And we sort of, it's one of many partnerships that CDP does have in the non-for-profit and NGO sector, and one that we're sort of actively seeking to sort of further build out. This is a brief list of the crossover between the two organizations, of those that are CDP Investor Signatories and in the IEN network. And this is sort of a brief snapshot of just a few of the endowments that we do work with. We're very cognizant of the importance of university endowments in terms of the net zero challenge that faces the global economy. And so this is sort of an area that we're actively seeking to sort of build out further through partnerships like this. As I mentioned, we really view colleges, universities, and endowments as a critical actor, and they're among some of the most powerful institutional investors in the world. Their university endowments, as we've seen in recent years, have made waves through decisions around divestment or targeted divestment around fossil fuel companies as that asset class has emerged as a large climate risk. So there is sort of a big opportunity for colleges and universities to be both leaders and practitioners in environmental action. And in particular through the setting of net zero portfolios and initiatives such as the Net Zero Asset Owners Alliance and the recently announced Net Zero Asset Managers Coalition. In terms of the IEN endowment roadmap, which I'm sure you're all familiar with, I did want to highlight some specific points where CDP can be of use to those following this particular roadmap. And in particular, steps 4, 5, and 6, assess, align, and monitor. Having access to CDP data as a CDP investor signatory allows investors to incorporate data in their assessment of either investment targets or at the general portfolio level. We also provide data and portfolio tools to align with certain benchmark goals, whether that be a net zero goal or some other carbon management or carbon footprinting exercise. And furthermore, it then allows for real-time monitoring through a variety of data solutions. Now to go into the specific. Sorry, I think. Sorry about that. I got some cross chatter on that one. But to be an investor signatory, we ask that any sort of signatory has assets under management of some kind. So we work with both sort of fund managers, asset owners, asset managers, and the only requirement is that there is some kind of asset under management that allows entities to neatly fit into our investor request. So our investors, as I discussed at the top of the presentation, have act as requesting authorities that works with us to manage the disclosure requests that we then feed back to investors through our investor dashboard. We do apply an annual fee for our investor signatories. For those investors that manage over $1 billion in assets under management, we charge an annual fee of $1,475. For those that manage under $1 billion, the annual fee is $975. So for that annual fee, investors have access to all companies that disclose to CDP through the investor request, which in 2020 involved over 2,700 companies, which included a coverage of over 75% of S&P 500 companies. This is sort of a snapshot of the variety of data solutions that we do offer. In addition to the corporate response data set that all investors signatories have access to, we also offer a variety of structured data products that we make available for additional purchase. These include the modeled emissions data set, which is a product which fills the gap between the companies that report emissions and those that don't by estimating emissions of over 7,000 companies. We also offer specific investor-focused research reports at the sector level. Some examples that you can see here on the right include the automotive sector, the electricity sector, as well as the cooling sector. We also do offer a temperature ratings product, which CDP has developed in tandem with the WWF, and as well as a fund rating assessment. So one thing to keep in mind with CDP's climate change questionnaire is that it is one of the only standards to be fully aligned with the Task Force for Climate-Related Disclosures. This is a task force that was convened in 2017 by former Governor of the Bank of England, Mark Carney, as well in partnership with Michael Bloomberg. And this is fast becoming the gold standard for climate risk assessment among both asset managers and companies. CDP's climate change questionnaire is fully aligned and structured around the 4 pillars of governance, strategy, risk management, and metrics and targets. Any company that discloses to CDP is effectively disclosing in a TCFD compliant way. And any investors that use our climate change database are using TCFD compliant data structure. For those that aren't aware, this is the general framework of the TCFD and how climate-related risks and opportunities can be assessed. It takes into account specific transition risks that relate to the transition to a low-carbon economy, as well as acute and chronic physical risks. CDP questionnaires also give companies the chance to list the opportunities that they're pursuing from a positive point of view, ranging from resource efficiency through to energy source usage and resilience. This then flows into the estimated financial impact of those risks that are being mitigated and opportunities that are being pursued. In terms of how we present this data, we have incorporated TCFD recommendations into our questionnaire, as well as the guidance that is available on our website. We then also release a scoring document called the Cdp Scores, which is reflective of companies' disclosure journeys, ranging from D, which is reflective of a company that is at the start of their disclosure journey, through to the A designation, which represents leaders in disclosure. We make this scores database available to all investor signatories that is included in the basics investor signatory package, and has been used by many of our investors to better improve their security selection, as well as used as an engagement tool. As you can see here, this is the way in which we've incorporated specific questions into the 4 pillars of the TCFD. The questions around governance and strategy are more qualitative in nature, asking companies what their board level strategy is, as well as specific scenario analysis and planning that is conducted at the board level. The risk management module focuses more on the specific steps and risks and opportunities that have been identified and steps that have been taken. And then finally, specific metrics and targets, including scope 1, 2, and 3 emissions, energy usage, as well as use of things like biomass fuels. We also, in the target section, ask companies what relevant targets that they've set, sort of looking forward, whether that be under a net zero low carbon designation. In terms of the actual TCFD-aligned disclosures, across our sample through the investor request, 95% of organizations have disclosed with us that they have board level oversight of climate issues. Diving a bit further into the risks and opportunities, however, 84% identified risks to their business from climate-related financial impacts, yet over 91% identified opportunities. Most tellingly, however, only 45% used climate-related scenario analysis to inform strategy, which is sort of very much reflective of a lack of intake from many companies that us, along with other organizations, are hoping to improve. So I just want to take a few minutes to briefly explain some of the specific metrics that investors are able to glean from questionnaires. This particular question relates to the governance mechanisms with climate integration. So as you can see, there are a variety of categories here, ranging from just reviewing and guiding annual budgets through to setting performance objectives, for example, tying executive pay to certain climate or emissions reductions goals, all the way through to monitoring and overseeing progress against all goals and targets. So there is a broad range of outcomes that you can see here, but certainly these data points can be pulled apart for engagement purposes, so that investors are able to understand the sort of level of governance that is being applied by their portfolio companies. Questions around strategy also relates to, as I mentioned before, climate risks with substantive financial impact. As you can see here, there is an overwhelming amount of companies at the cross-sector level that have identified specific climate risks with a substantive financial impact. CDP data is completely aggregated by the by sort of sector, so you're able to dive into, for example, the transportation services sector that that you can see has a much lower rate of identifying climate risk with substantive financial impact. And then finally, this is the part of our questionnaires that investors have the most amount of desire to find out, which is emissions reporting. And again, it's possible to dive down into each individual sector to identify the percentage of companies that are reporting specific emissions numbers. So as you can see, as you would expect, sectors like the power generation sector and sort of other similar ones have a slightly higher rate, just above 70 to 75%, given their sort of relationship with emission scope reporting. One laggard that we do see is the fossil fuel sector, which CDP is consistently targeted for better and more complete emissions reporting. But this information certainly gives investors an idea of the current disclosure picture and where more action is needed from companies in terms of disclosing their environmental impact. So I'm going to pass over to my colleague Connor now. CDP runs a couple of shareholder engagement opportunities around the year that is focused on improving disclosure metrics, as well as the scope and quality of disclosure. So I'll pass that along to him now.
Great, thanks, Tom. So as Tom explained earlier, CDP's Investor Signatories give us the authority to go out and request companies for environmental disclosure on their behalf. Of course, responding is still voluntary, and unfortunately, there are many companies that still choose not to capitalize on this sort of disclosure framework. So since 2017, CDP's run like an active investor-led engagement campaign to affirm CDP's request by allowing signatories to collaboratively target companies that have previously failed to respond to our request. So investors can select to engage any company who sort of failed to respond to CDP's information request the previous year. And there's a couple of ways they can participate. They can either engage as a co-signatory to the letter or as the lead investor who will send the letter directly to the company on behalf of the group and possibly sort of partake in follow-up engagement depending on the investor. We do aim to make this sort of process as easy as possible for the participating investors. So CDP creates all the letters, provides contact points and other engagement materials for the lead investor, and CDP's own corporate engagement team supports investors' engagements throughout the disclosure period. So yeah, this campaign is a key mechanism for investors to let companies know that they value CDP disclosure and that companies should be giving it due attention. And the campaign has a measurable impact on non-responding companies' future submission rates. We'll take a quick look now at the sort of overview of the campaign by numbers. Next slide, please. Okay. So the chart on the right displays the scale of the campaign to date. So the dots represent the number of investors participating each year in ascending order, and the bars show the number of companies they engaged. So we can see there's been significant growth since the campaign was launched. In 2017, there were only 43 investors engaging 425 companies across all three questionnaires. And in the most recent campaign, we had 108 investors engaging 1,025 companies. So it's an average sort of 25% year-on-year increase in both the number of investors and companies in the campaign. And you can see the increase in the number of companies being engaged in 2020 compared to 2019 was particularly significant. Investors were engaging 60% more companies last year than in 2019. So investors are really seeking now to sort of improve their data coverage, both as they raise their own ambition, but also as the requirements upon them for their own disclosures and product validation increases. Now, to evaluate the impact that investor engagement can have on, in this instance, increasing corporate disclosure on environmental issues, we compare the response rates of companies engaged to the campaign to a control group of other non-disclosing companies. So basically, not all non-disclosing companies are engaged in the campaign, since it's the investors that select which companies they want to engage. So we look at the response rate of the non-disclosing companies that weren't selected for this engagement, and then compare the results of these two groups. And these are the results that you can see summarized in the box beneath the chart. You can see that the rate at which companies submitted a response to investors' requests was at least twice as high for each questionnaire compared to the companies that weren't targeted in this engagement. The distinct company response rate across all the questionnaires was 20% compared to 9% in the control group. And what this means in sort of terms of, in real terms, is that the engagement was responsible for an additional 116 new disclosures in 2020 than would have otherwise been submitted. Because 9% of all the non-disclosures presumably would have still submitted a response on their own. But this is like a really valuable contribution to the sort of ESG data ecosystem, as well as sort of increasing stewardship, from investors over their sort of holdings, and sort of, doing their best to sort of future-proof them against any transition and physical risks. Next slide, please. But the engagement effect, it can be more or less pronounced in some areas. So the charts on this screen now show the response rates of companies engaged in NDC compared to their peers in the control group across regions and sort of high-level industries. And you can see, though, almost in all cases, companies that are engaged in the NDC disclosed at a rate significantly higher than the other sort of non-disclosures that weren't in the campaign. I'll just mention a couple of examples that sort of highlight potentially how powerful this type of collaborative engagement can be. So in the most recent campaign, there were 10 companies in Russia that investors requested to disclose on CDP's climate change questionnaire, and 6 of them ended up submitting a response. But there were a further 25 Russian companies that were also not disclosing on climate change that weren't engaged by investors, and only 1 out of those 25 submitted a response last year. And then looking a bit at the sort of sectors, you can see some similar, margins between the two groups. So, whilst on the chart on the right, you can see fossil fuel companies, they had a sort of below average response rate for the campaign, 16%. But the companies that weren't engaged by investors in that sector only disclosed a rate of 4%. And for a better sense of the numbers sort of behind those percentages, investors engaged 94 companies in the fossil fuels industry, and 15 of them disclosed. And then out of the remaining 175 non-disclosing fossil fuel companies, only 7 of them submitted a response. So, this type of investor engagement can really have a significant impact, even on the sort of highest impact sectors that are typically more reluctant to kind of provide this type of enhanced disclosure or sort of engage as much on these topics. So you can see like a really big impact. And actually a full report of the results of the campaign, including why disclosure is crucial to certain sectors and regions, actually just came out this week. So I'll drop a link to that in the chat in a moment, in case it's of interest to any of you. Next slide, please. It's just one final note on how being a signatory to CDP, as well as a participant in the non-disclosure campaign, supports responsible investment initiatives. I'm sure you're all familiar with PRI, a very worthwhile initiative. So I just wanted to highlight that being a signatory to CDP is acknowledged by PRI's questionnaire as counting towards promoting responsible investment. And then further to that, participating as well in the non-disclosure campaign will also get you points within PRI's engagement module. And I would hope you're all also familiar with the investor agenda. It has nearly 1,200 investors that have taken action in one of its focus areas. But just in case for those of you who may not be familiar with it, the investor agenda sort of basically encourages investors to set science-based portfolio emissions reduction targets consistent with net zero emissions by 2050 or sooner through 4 action areas. First one's investment, and you have corporate engagement, investor disclosure, and then policy advocacy. So investors who are signatory to CDP and or participate in the non-disclosure campaign, as well as the CR100 Plus campaign as well, will be counted as active in the corporate engagement focus area of the investor agenda. And just one sort of quick mention of, we do have another sort of engagement campaign that we just launched in 2020, which is on science-based targets. Hopefully you're all also familiar with science-based targets, but if you're not, it's basically an initiative that where companies and investors can submit targets to the Science-Based Targets Initiative, who will sort of verify that those targets are in line with sort of 1.5 degree trajectory by the end of the century. So companies that have science-based targets can sort of be taken as, on a path to sort of being in line with the Paris Agreement. So, obviously the more companies in your portfolios that have set a science-based target, the more in line your portfolio will be. And that's also a very easy, I think, campaign for investors who are signatory to CDP to sign up to. It, at the moment, doesn't have the sort of direct engagement element of the non-disclosure campaign. Anyone interested can just put their name down, and a letter will be sent to a sort of sample of, I think about 1,400 or so, maybe 1,700 high impact companies, urging them to set a science-based target to sort of bring their emissions down in line with the sort of Paris Agreement. So it's just a few ways that CDP helps investors engage with their holdings, and also sort of how these initiatives link up into other responsible investor initiatives. But yeah, that's all from me for now. So I'll pass you back over to Tom.
Great, thanks so much for that, Connor. And if there are anyone who's listening has more interest in the engagement campaigns that we do run, we've seen that there has been a big markup in interest from university endowments to be sort of louder voices in the shareholder and corporate engagement space. So please don't hesitate to reach out for any questions about that. So this is just as a sort of a coda to what Connor mentioned. This is the process that we use for our science-based targets engagement campaign, where we use a complex sample setting process and in order to encourage companies to institutionalize and set science-based targets with the SBTi. Just a brief few final slides just to discuss a few additional benefits of being an investor signatory. One is having purchased access to our sector research series, which I mentioned at the top, that flags material climate issues within each sector, as well as specific data tables around specific engagement topics and ideas for our investors, and has been lauded by the investment community as industry leading reports. A last area that we do offer engagement opportunities is within the CDP Investor Network itself. We run a couple of different programs, one of which is the Forest Champions program, which aims to raise awareness of deforestation issues in the supply chain as well as in the capital markets. It's the relationship to generalized climate risk, and the importance for investors to understand the risks and opportunities in the forestation, in the forest sector. So this is an example of outreach that we do within our investor community, offering training around the issues and sort of highlighting the risks that do exist. Engagement support, looking at benchmarking practices, certain key performance indicators for companies where investors are engaging directly, as well as specific data insights around traceability, supply chain management, and risk assessment. So these are sort of some of the top level areas that we do sort of offer investor support. But these can also occur through one-on-one meetings with some of our forest experts. We do have a specialized forest team, as well as specialized climate change and water teams. We offer workshops that can cover anything from training to engagement support and data insights. We also convene roundtables with major investors, as well as smaller shops, to create discussion and ideas around how we can improve our engagement, our advocacy for issues, as well as specific items within questionnaires. We also offer peer interactions for like-minded investors who want to engage with other CDP investor signatories. We use the Forest Champions example here just to sort of highlight some of the programs that we are offering and actively developing, and that we sort of are actively encouraging our signatories to participate in things like workshops and roundtables. One last area that we would like to highlight is traditionally CDP has been focused on the equity markets, looking at public companies disclosing through CDP to provide better information to equity investors. Recently, CDP has launched a fixed income pilot, which works in the same way, but through a sample setting process and requesting authorities, but is asking sort of a variety of companies to disclose information that will help to serve the fixed income market. This is an outgrowth of our mission around providing relevant, decision-relevant information to investors in the capital markets around the world, and really adds muscles to CDP's current request by expanding the audience of who is asking for corporate disclosures. We are running this in both the corporate and municipal fixed income spaces, again reflective of CDP's mission in both at both the government and the corporate level. But what this really allows us to do is develop further research and insights, allows us to engage closer with private companies that we would not have ordinarily approached under our traditional equity-focused investor request, but then also allows for a fuller picture of universalized risks, supply chain risks, and generalized climate risks that stem from some of the recommendations of the Task Force for Climate-Related Disclosures. So this is a pilot program that we are launching. We are also looking at launching other pilot programs that seek to expand our footprint and our ability to draw in data from a variety of sources. And if any investors are interested in some of these programs, that's something that we would be more than happy to discuss. So that's sort of the sum of our presentation. Before we launch into Q&A, I'd encourage any investors or individuals who are interested in becoming investor signatories to reach out to our emails, and we'd be happy to schedule a one-on-one conversation and go into further details about our model, the data that we hold, or some of the engagement opportunities that we launched throughout the year. But with that, wanted to leave some room for some questions that might have come up.
Yes, and thank you both for the broad overview and also a little bit of some details here and there to show us what it really looks like in practice and what investors can expect to get from companies by working with you and by working together to support the requests that you're coordinating. And we have a first question, and others, please do use the chat and Q&A functions to add more questions, or if you want to use the raise hand function to ask a question out loud, if that's easier, we can do that as well. But a question around some of that information that comes in especially on scope 3 emissions. Jackson is asking, how accurate is the information provided to you? And are any of these audited? Any metrics in terms of trends on scope 3? So a challenging one, but curious what you're seeing.
Yeah, that's a very good question, and it's something that we get asked a lot about. So we don't apply a verification service in the sort of the emissions levels or figures that are disclosed to us. We do actively encourage third-party verification and have sort of large teams in our corporate and supply chain sections of CDP that work with companies to sort of improve the transparency and reliability of those figures. And we also encourage companies to use the GHG emissions protocol, which is an emissions accounting standard that was developed by the World Resources Institute in partnership with a number of other bodies, and CDP is actively involved with. We do have a specific methodology for our modeled emissions data set, which is available for additional purchase, that we use to estimate scope 3 emissions. That methodology is completely open source and is available on the CDP website. And we go through a very specific process that it uses sort of a bottom-up and regression model that looks at companies' activities and estimates using a sector-specific methodology to come to certain scope 3 emissions estimate for thousands of companies, and that's used by leveraging existing CDP disclosure data as well as other relevant documents like company filings.
No small undertaking, but an important one. We have a couple more questions. One is just around the Forest Champions program that you mentioned, and if you could talk a little bit more about, what that looks like, what folks on the call could do to get involved or to use the work that you're doing there in their own strategies.
Sure. Yeah. So the Forest Champions is an initiative that we're very excited about, and is mainly targeted at Investor Signatories. So, if any organizations are interested in participating in that, I would say that would be the first step, is to sort of join the fold, and then we'd certainly be able to welcome anyone interested to the Forest Champions program. But that's really sort of an awareness, a program that is used to raise awareness around the specific risks that exist around forest resources and deforestation practices. And a few of my colleagues convene meetings through the year, mainly through roundtables and workshops where we really sort of open up for discussion with investors who are trying to grapple with this challenge, as well as providing relevant materials that they can then use in either their portfolio management practices, in some of their engagement efforts, or other relevant uses of that kind of knowledge. We have a specific forests thematic team that works on developing the questionnaire each year, and that we sort of really work with them closely to help provide the right information to our investors that want to make use of this information that that we collect and this expertise that we hold.
Great, thank you. And related to questionnaire development, not specifically on the Forest Champions, but questionnaires writ large, we had a question about whether the questionnaire is likely to change to align with some of the disclosure requirements that are to be introduced under the EU taxonomy. And I mean, I think we could think more broadly too about how does the questionnaire change as regulations change anywhere and as the broader environment on ESG data changes.
I might get past the torch onto my colleague Connor, who I think has a bit more experience with the sort of questionnaire development aspects of our work.
Thanks, Tom. Yeah, there are some new elements incorporated into sort of this year's questionnaire to help I think primarily to sort of help investors sort of satisfy their sort of own disclosures when they have to, sort of prove what sort of like certain thresholds or proportions of their sort of products or investments are meeting the kind of taxonomy rules over sort of green, sort of green investments. I'm afraid I can't remember the specifics on which data points were sort of what was introduced to the questionnaire. But I do remember, like, I do remember sort of a discussion around it sort of a few months ago. The sort of questionnaire development usually takes place during the kind of like, well, now I say the previous disclosure period sort of for the next year. There's an open consultation, so investors and all stakeholders to sort of CDP are able to kind of feed in, so investors and companies can provide feedback on either what data points they feel need tweaking or maybe aren't relevant, or need to be sort of introduced to better capture the information they require. So there's always that kind of consultation process and sort of review of sort of the previous year's disclosed data to sort of see how applicable it is, in terms of like analysis and particularly once a new question is introduced. Obviously, the following year we'll see what data has been disclosed and determine actually how useful is that data, like to sort of analyze once you have it. So it's always sort of undergoing modification like that. We obviously try and keep it fairly consistent for comparability purposes. As you say, the other area we do factor in is sort of wider developments in the kind of market, whether it's either sort of regulations or other initiatives. We've always tried to align ourselves with GRI. Since 2018, we aligned ourselves with TCFD, and now, we are trying to sort of align it as best as we can, or make sure we catch information that can be used to meet the EU taxonomy requirements. And the questionnaires are publicly available as well. I think on the website you can go and look at the sort of the questionnaires that year, which include, they're very detailed, they're very sort of long documents, but they include sort of guidance around what is this question asking, sort of how it should be answered. And the scoring methodologies for those are also available, so that you can sort of, which is actually quite good. It's a useful way to kind of gauge what's best practice. If you can see sort of what types of responses, allocated sort of most amount of points, and that's a particularly focused area. The way the questionnaire works in general, or the scoring sort of system works in general, is we, beyond just a sort of basic disclosure, we do try and incentivize companies for best practice. So scoring methodology is just sort of designed to sort of incentivize and not just incentivize best practice, but there'll also be slight tweaks to the scoring methodology each year, but then every few years, taking into account sort of new market developments and regulations and everything, and just the progress of companies, will continue to kind of move the goalposts a bit forward to keep on trying to push companies towards those ambitions. So sorry I couldn't sort of name the specifics of what was introduced, but it is definitely something that gets factored into each disclosure cycle.
That's great. And to know that as investors' needs change, the system evolves as well. And there was a question that came in advance, and we may have time for one or two more if folks add them to the chat here. But one that came in advance that I think builds on this a little bit, particularly around the scoring and how you incentivize companies to not just disclose, but move forward in their actual practices and keep up with that constantly moving frontier. And the question that came in advance was around, where do you draw the line on, you want the disclosure, you recognize that some companies are going to be in a needs improvement kind of setting, and where do you draw that line of, well, they need improvement, but they're making progress from year to year, or they're showing some, policy or mindset change in their governance structure to move in the direction we want to see. How do you weigh that in the scoring process and in the engagement process to recognize where companies are and where you want to get them to?
Sure, yeah, and that is a really good question. So that's sort of most reflected through the Cdp Scores methodology. And what the Cdp Scores document is based on really is sort of TCFD principles. So what we say that our scale of A to D isn't, it isn't like high school grades where, D is a failing mark. It's really just more reflective of the steady journey that companies are on in terms of getting to be sort of a disclosure leader, which does take time to sort of build up. And CDP, our teams really exist to help companies on that journey. That's sort of really what our sort of core mission is. For the scores document itself, when you sort of would open it up, you would actually have all the constituent categories and the scores that the corporate and supply chain team has applied in terms of their, do they have board level oversight? Do they have a specific scenario analysis capability? These are all things that are sort of core TCFD pillars. And so really, because the TCFD has emerged very much as a leading gold standard around sort of a framework for climate risk management, that's sort of, that's the basis that we operate from. Any data product that CDP gives to investor signatories are not a black box. You'll always be able to see the work. Our methodologies are available on our website, so you can really see, to that point about where to draw the line. It really traces back to the frameworks that have existed and been developed by leading environmental and finance experts. And really sort of offers a rubric for investors to sort of assess, for a particular invested company, how are they, do we actually want to engage them on the targets that they've set, or the way in which they manage certain issues. And to that point, the Cdp Scores document has also been used by some companies to sort of really measure against the quality of governance within a company. Financial performance, one study has shown is that has been positively correlated with positive CDP scores, reflective of the strength of governance within those specific companies that have scored well and invested in proper disclosure practices.
Great, thank you. So we're just about at time, so I will give you the last word, Tom and Connor. I just want to thank everyone again for joining. I know these days everyone's schedules and just capacity to take in more information is limited. There's a lot going on in the world. So appreciate you taking the time to join and listen and share questions. We'll send around the recording of the whole program, along with resources like the report that Connor shared by email. So keep an eye out for that, and would love to stay in touch about ways that we can support, ways that CDP can support. Hope to see some people at the Climate Action Pursuit coming up. And yeah, with that, I'll give you the last word, Tom and Connor, and thank you again for the great presentation and the great work that you're doing.
Sure. Yeah. Thank you, Hannah, and thank you to everyone for taking the time to listen. We, for anyone that's more interested in either the process of becoming an investor signatory or some of the specific data services that we can provide to sort of support either portfolio management or engagement activities, we're more than happy to set up a one-on-one call to sort of discuss more in depth, your organization's ESG data needs and requirements. Please don't hesitate to reach out, and we're happy to answer any questions, or we'll set aside some time to discuss the sort of signatory sign-up process. But yeah, thank you to everyone for joining.
Thanks all.
Thank you, everyone.